Welcome, everybody. I have to admit, this is a bit of a selfish event because I kind of made it for me, and I'll explain why in a little bit. So, of course, we brought in Sami here to teach us how to take our swing trading to the next level. But before we get started, tell us where in the world you are. Let us know in the chat. We already saw Ryan said good morning from Hawaii, Big Island. Let us know where you are from. Also, very important, it's Sami's birthday. So everybody has to wish Sami a happy birthday in the chat. Yes, I told Sami, you need to go party, you need to go drink, eat steak, whatever on your birthday. And Sami said, no, I want to work. Sami said, we have to do a webinar. and what Sami gets, what Sami wants, Sami gets. So guys, thank you for all the birthday wishes in the chat. Yeah, everybody's saying happy 29th. Hello from South Tampa Bay. Bobby, what's going on? Bobby's a big fan. We love Bobby. Yes, everybody say happy birthday to Sami in the chat. We really appreciate it. Again, trading is risky business. It's not a joke. Please memorize everything you see on the screen. We really appreciate it. Give us your undivided attention. Find a quiet place without distraction. Shut down everything on the internet. We know you're looking at Instagram and Twitter and all that garbage. Shut it all down. You don't need it. And stick around. We have a special offer for everyone who is here at the end. So a bit about my friend Sami. So he's been a professional trader since 2007. He runs all of our big stuff, our Pristine Mentorship Program, which is by far the biggest and best education program in the industry, the Pristine Active Trader VTF, and something new we will talk about later on. Again, something new that is very dear to my heart. He's an expert in core, day, and swing trading, especially gap and climactic plays. He's also a former CPA, which is very unusual because most traders are very scatterbrained, disorganized people, but Sami is actually a former CPA. So this is why we listen to Sami. So Tom put it best, and I think this Tom is actually in the chat right now. I could be wrong, but I'm pretty sure this is the Tom in the chat who said, Sami's the best trader I've met. Plus, he can teach. As I've learned over the years, the many who can trade can't teach, and the many who teach trading don't trade successfully themselves. Sami is both a great trader and a great coach. Also, Sami's made a ton of amazing calls. He predicted the hood rally to 40. He predicted the market rally on September 12th. That was the day after the bottom. He said the market bottomed, and I still love Tesla. He predicted Tesla to 400. He predicted Bitcoin to $100,000. And that was after he called the bottom back on under 140. Sami was one of the few people who actually said Tesla's going to 400. That was way, way before the election. And again, he predicted Bitcoin to 100,000. And then he predicted Bitcoin to 80,000. So I didn't see anybody nail Bitcoin in both directions there. And also, Sami's an amazing teacher. People have paid up to $6,000 to work with Sami. He says he has students from all over the world. Many of them have flown from places like Germany, Israel, Argentina to the United States to work with Sami, and you can learn from him today, which is awesome. Now, before we get started, obviously, reality check again. As I said before, trading is risky and you could lose money, and success is not guaranteed, despite what you might have heard on TikTok this morning. So today we're going to talk about the 80-20 rule in life and trading, Sami's number one swing trading strategy, and how you can get his number one trade every single day. So we're going to start with the Pareto principle, which is, this Italian economist noticed that 80% of Italy's wealth belong to 20% of the people. And the whole point is a small number of inputs drives almost all of the output. Now we see with Apple, 20% of Apple products drive 20% of sales. Twitter cut 80% of its staff. It's still running. 5 NBA teams account for 69% of all championships. The U.S. has 332 million citizens. 535 people in Congress cause 99% of the problems. And we see this in stocks too. So if you look at 2024 alone, the top 20% of SPX stocks gained 68%. The rest gained 5.5%. So this shows you why you need to focus. Focus on the big winners. because you don't want to end up in that bottom 80% category and missing out on the gains. Now, I noticed something really funny about Sammy's biggest winners. Now, Sammy, the joke we always make is that I call you the garbage man because you tell me about these stocks like Disney and Twilio, and I start rolling my eyes because I'm like, why? Now, I think you should explain to people, Sammy, how you actually pick stocks, that you actually don't care what the company does.
I do. No, I don't care. I actually don't care about what the company does. I often don't know what they do, or I don't even know their names other than the ticker symbol. By the way, thank you so much for the birthday wishes. I really appreciate it. Happy to be with you. Yes, and Mike was exactly right. For my birthday, I wished for a webinar. Okay, so this is a core concept in the pristine method of trading, which is you want to look to buy stocks when everybody's hating them, when nobody wants them. So you just take them off other people's hands, and you want to be selling stocks. At least you want to be looking to sell stocks when everybody's wanting in, because if everybody's wanting in, if everybody's already got in, it means probably the top is in, or we're very close to the top. And likewise, when nobody wants the stock anymore, it means those people have already sold it. They don't want it because they've already sold it, which means there's no more selling. And so with these stocks that Mike is talking about, they look awful to most people because they've dropped 90%, 80%, sometimes 90+% from the top. But then I noticed that they start to consolidate in a very, very tight fashion, and which means there's not much trading going on in those stocks. There's not much interest, basically. Why? Because most everybody got hurt playing these stocks as they dropped. The previous stage was a stage 4 downtrend. So as they're going sideways, I start to look for signs that the stock is about ready or getting close to breaking out and transitioning back into the uptrend. So when I start watching those stocks and I start stalking them, it is true that they're garbage stocks, or whatever you want to call them, Mike. They're not really interesting. They're not moving. They're 90% down from the top. What's so interesting about them? Well, because I'm seeing things that are signs that the stock is about to pop and start to go back in an uptrend, basically. So that's what I like to do the most out of all the strategies that I do. That's my favorite strategy, probably.
Yeah. So if you guys attend the live streams that Sammy and I do, I always notice that this is what happens. The stocks are hated, then they look bullish on the monthly chart. And, again, these are the types of names. And I'm always like, Sammy will DM me on Google and say Lyft looks great, or I love Twilio. And I think, what's wrong with you? These are terrible. And Disney is funny because Sammy bought Disney and made money the day after I sold it. So I was very upset. So again, the monthly chart gives that confirmation that buyers are stepping up. And we're going to go through a bunch of examples so you can see exactly what we're talking about. And again, you're going to laugh at some of these tickers because they're just so ridiculous. They're they were amazing in 2021. They're terrible in 2025. And a great comment from Bobby here. Bobby said, Michael is not lying. I loved Sammy's mentorship. Sammy is a serious stud. Thank you for Sammy training me, especially risk management. Okay. So we're going to go through some examples of these garbage to glory trades. Now, interesting. Jude in the comments is saying, sounds like AMD, much hated now. That is exactly the type of stock that goes on the radar. Exactly. Not necessarily buy it right now, but that's exactly the type of name that within the next 1, 2, 3 months could end up on the buy list. So, Sammy, let's go with Twilio. This is a classic. This was a huge stock in 2021. So why don't you just walk us through what you were seeing on the monthly chart here?
So if you look at the monthly chart, you can see that Twilio was dropping in a really big way. and then it started to consolidate. You don't have the volume, but I bet you the volume while it was consolidating was very, very low. And then that means people got hurt on the way down. Look at the size of the bars. And then those same people are no longer interested in it. They're not buying it. They're not selling it until the stock starts to break out. Notice the last drops failed to make new lows. I can go over the chart on my screen, Mike. That would be even better.
Sure.
But yeah, but basically, yeah. So take a look at Twilio. So notice how this is when people were getting hurt trading the stock. Let me zoom in a little bit, and then notice how when the stock bottoms, these sell setups here. So prior to that, they were making new lows, but here, nope, rejected. In fact, it tried to go higher already, but the 20 was still declining, so it got rejected too. And then notice how tight the consolidation was. Notice that 20 MA that was starting to hook, that was starting to curve up. That's kind of your indication that it's about ready to go. In fact, I remember on the daily chart, I had 2 calls on it in the 60s. I don't remember the exact entries. It didn't look that good. And I usually I usually only play it if the daily also matches up. And so this was like an entry right here. But again, there was no real setup on the daily chart. And then it put in, I think, a red bar. And then I said, oh, let's add to it over the red bar's high. So I doubled up on the Twilio. And then the target, I believe, was 140, wasn't it, Mike?
Yeah.
Then,
This is exact. See, my memory is better than Sammy's.
There you go.
So yeah. So Sami, the first entry was 64.41. The second was 65.11. And then he wrote it all the way to 140. Now, I do have a fun piece of trivia with Twilio. So when Sami bought it, Wall Street was saying it's going to 68. Wall Street said 68. Sami wrote it to 140. And again, Twilio, one of the most hated stocks in the universe. You want to hear something funny, Sami?
Go ahead.
I own Twilio, and I think I wrote it from 110 to about 64.
Oh my God.
Okay, let's talk about Disney. Now I sold Disney right before Sami bought it, which again is hilarious. But yeah, so Disney was down 54%, bad earnings, streaming is terrible, Marvel dying. I hate Marvel. Can't stand it anymore. But Sami, could you talk a little bit about, again, like what you're seeing on the monthly chart with Disney?
So am I sharing my screen?
I'll pull yours up.
Perfect. Thank you. So Disney monthly chart. So sometimes the stock, so there are 2 ways in which stocks bottom. They either drop and then they go sideways. The 20 catches up and it starts to curl and it breaks out. Okay. That's one way in which they break out. So in which they transition. Another way is they drop and they bounce really hard and they give you a pullback. So notice on the Disney, we didn't get that tight base that we see on the Docu over here, which was another play, or the Twilio, or the VNet, or the Lemonade, or LMND, or the Lemonade. You see what I mean? The base, the tight base. VNet, we just exited. Baba. So you get what I'm saying. But sometimes you don't get that. You get a pop. You missed it, right? You missed it. No, you didn't. Because if it gives you a pullback, perfect. Disney, we actually played it twice. We played it on the sell setup failure right here as the 20 hooked, and then we played it on the pullback. So it just depends on the way the stock sets up. I prefer the base. It's clear. It's easier. Redfin, same thing. Pullback and then boom, big pop. But we didn't have much of a base. So it just depends on the way the stock sets up, basically.
Yeah. So Disney, 22% and 15% gain. So I think this is interesting. So Sami, something I notice you do a lot is, which I see rarely, is that you will buy something, it will go up, and you will buy more. Because a lot of times I hear traders saying, I sold some because it went up. But I see you do this a lot with Disney, with Twilio, some of the other names we'll discuss. Why are you not afraid to buy? I guess that's the easiest way to put it, but what makes you want to buy more?
if it still looks good and it's not nowhere near target, then, and the trend is in my favor, why not? I remember hearing a story told by Mark Douglas, who wrote the best book on trading, probably trading psychology, trading in the zone. He said that Richard Dennis in the 1970s, when he ran the turtle traders for a year, had a batting average, a hit rate of under 10%, meaning he was right about his picks less than 10% of the time. And yet he supposedly made $100 million in 1 year. And how did he do it? By pyramiding, by being, when he was right, he made sure the market paid him well. And when he was wrong, he got out quickly. So, and I think that's really, if there was a secret to trading, that's it, especially when it comes to long-term trading. Look at Warren Buffett, for example. Is that when you're right, you got to get the market to pay you, because when you're wrong, the market doesn't let you off the hook easily, does it? I mean, I wish it doesn't. It's not like it drops a little bit and goes back up and you're like, oh, I got scared. It was just a scratch and it went back up. No, it drops. And if you stay in, it keeps going until you're like wiped out. So you want to do the same thing to the market when you're right. You want to make sure it pays you. And so it's something that I try to do. It's not the easiest thing in the world to add to a position, because psychologically we're wired. Our fear kicks in when we have money on the line. When the stock is going in our way, because the fear of giving back kicks in. We start to get, hey, it's up 5,000, up 10, 20, whatever. What if I give it back? Especially when it starts to come in. You immediately start focusing on the red bars, as Mark Douglas put it. He said you start paying an inordinate amount of attention to the red bars because they trigger your fear. So fear of giving back profit makes us get out of winning trades fairly quickly. Losing trades, the opposite thing happens. Hope, or hopium, kicks in, right? You start hoping that it will bounce back up, and you stay in it longer than you should have had you not listened to hope. That's what Jesse Livermore said in his book, Reminiscences of a Stock Operator. So my goal is always, if I can, add to the position. Now, I don't want to mess it up. Like if it's going well and there's no way to add, look at some of the China names, they just shot up and you just can't add. I was in the BABA, I couldn't add, but I had a big position, so I wasn't like actively looking to add, but it shot up and you can't add. But if it goes up and starts to base, you can add on the breakout, or it pulls in a little bit, you can add on the pullback. So that's basically the rationale behind it. Is I want to make sure the market pays me when I'm right.
Okay, and Disney absolutely paid. And fun fact, so if you see this big earnings gap up here, everybody see this, the big earnings gap? That was Disney's biggest earnings gap since April 2020, because Disney's earnings had been so bad. Sammy got in right before that huge move. So Lyft is another one. Again, it's like turning up on that monthly chart, and then Sammy nailed 24% gain in like a week on Lyft. And fun fact, like Lyft has been a terrible stock. It's been crushed by Uber, and Sammy nailed it for like 24% in about a week. Now let's talk about this VNet. So Sammy has been all over China. So if you've been watching the live streams with me and Sammy, I don't know how many weeks in a row I said, Sammy, what do you like? And Alibaba came up, or Yin, or all these other China names. But VNet was one of the grand slams. So if you think Baba was big, you should look at this. So again, VNet, 90% off the highs. And Sammy, like quickly again, like what was it? It's breaking out on the monthly chart. Let's pile in.
Yeah. So take a look at it. It's the same. It follows the same exact pattern. It's down a lot, 90%, like you said, starts to base a little bit, and the 20 starts to curl. And then it's like, and then it's about to break out. You can tell almost. And then it's in a sector that I like, the China stocks, the China sector. So why not give it a try and see what happens? And how much did it go up? I mean, percentage wise?
163%.
And in how many days? I mean, literally in like 2-3 weeks. This was a recent play.
We can
I mean,
count
how,
them. 1, 2, 3,
yeah,
4, 5, 6, 7,
like a
8,
month.
9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22. 23 days. So 163% in 23 trading days.
Right, and it's starting to pop again, by the way. But we it got to the target and $1 more, and that was exited on February 20th or so. So not too long ago, just a couple weeks ago.
Yeah, not too bad, Sammy.
Not too bad.
163% in a month is not. What do you guys think? Is that good enough? 163% in a month?
Hey, you were pretty good at about Reddit. You nailed it too, Mike.
I nailed Reddit.
Too modest.
I did not buy it. I did not buy it. So, okay. So, Affirm is like a hilarious one because this is a classic like Kathy Wood stock, I think, from 2021 that turned into a favorite of short sellers. Another one said, this is a scam company. Stay away from it. And same thing. Another like beautiful, like it's setting up on the monthly chart. And then before we know it, Sammy's up 51%. So Sammy, I think we should hit home that I am the one that's adding in all this new stuff to help tell the story. But Sammy, you're not aware of any of this, right? You're not even paying attention
to the news.
Yeah.
No, I didn't know it was a favorite of Kathy Wood. I would have shorted it too. I'm kidding. I played ARK. I played ARK a couple times.
We will get to ARK very soon. We are going to talk about ARK in this presentation because for a while this year, ARK was the number one ETF in the market. But yeah, Sammy nailed Affirm for 51%.
The last exit was pretty bad about Affirm because I wasn't expecting the top. So you see how it shows exit 59.89. It went to 80 plus. So that's a bad exit, but that was my trail. That was my stop, and it just trailed out. But why did I trail it out there? Because again, I wasn't expecting it to top out. I wasn't expecting the market to top out like it did. And so a lot of these stocks got crushed. And so that turned out to be not the best exit I've ever had.
That's but it was a very solid humble brag on Sammy's part.
Wasn't trying to.
So Sammy is he messed up. He only made 51%. Very, 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 very bad time. Now this is another hilarious one. DocuSign. Because anybody out there uses DocuSign, it's horrible. It's so annoying. And again, this is a Kathy Wood stock, a pandemic stock. Again, the monthly transition break. Yeah, everybody keeps using the word beast. Todd also said Sammy is a beast.
I look like one, maybe that's why. You're looking at my face.
You look, Sammy, you're quite a handsome man. I don't think you should say things like that. But yeah, another one. The monthly transition A breakout, 42%. Not bad. I mean, you could have held it on longer, but 42%, not so bad. And of course, ARK, another one that was a darling in 2021. Monthly transition A breakout. And Sammy, he bought it, he added to it, and it went up huge after the election because, ARK owned Hood, Tesla, Coin, Palantir, all the hot stocks. So I think like everybody can see that there is a formula to this. And again, like at the beginning of this presentation, I said this whole thing is kind of selfish because in all the great discussions I've had with Sammy over the past year, his favorite stocks, it always comes up the same story. It's a monthly, it gets destroyed. It starts curling up on the monthly chart. Sammy tells me, you should buy ARK, you should buy Lyft, you should buy Affirm, you should buy Twilio. Of course, he always tells me this right after I sold it, so I feel like an idiot. But again, that is the theme, and it keeps on working because it's almost like being Warren Buffett with a chart because nobody wants it. It's undervalued, can't get any worse, and you're seeing 40, 50, 163% gains in these stocks, which is pretty insane. So we're gonna get to the big question. The big question. It's a very big question. Do you want Sammy's next big number one idea? Type yes or no in the chat. And it's okay to be honest. If you don't want these big ideas, you can type no. But just type yes or no in the chat, and we can tell you how you can get all of Sami's best ideas. All right. T3 Live is saying yes. Is that cheating? Amber says yes. I think that's also cheating. Jude, Joan, everybody, cool. Okay. So we are announcing something all new today that we've never offered before. So we're making a huge change to Sami's swing trading service. Now, I'm going to set it up with, we had the weirdest complaint in the world. People were actually saying, Sami gives me too many ideas, which is baffling. And we couldn't explain it. Like we had no solution. What could we say? And it's actually been a problem that Sami gives out too many good ideas. And so the way we are solving this issue is, so we're saying goodbye to Strategic Swing Trader. It's been beautiful, I think, since 2017, 2018, maybe.
17.
So Strategic Swing Trader's been around for a while. And we're going to say hello to number ones, because we want it to be super, super obvious what this is. And it's literally Sami's number one idea each day. And the focus is on the big picture ideas. So, because we want more of the Affirms, the Twilios, the Lifts, the Disneys, even Zoom. Like Sami's even made money with Zoom, which baffles me. But yeah, so we want to focus on these big picture ideas. So you can get his number one idea every day, because traders keep asking, they're like, I love SST, but which one do you like the most? What's the number one idea? Like the examples you saw before. It's because people, they want the monsters like Affirm. Now, even with a bad exit, Sami made 51%. Now, so if you're a current SST subscriber, you don't have to do anything. You will start receiving number ones tomorrow, and you keep your current pricing. So if you are a subscriber right now, you don't need to do anything. You don't need to buy anything. You can just chill, and things will just carry on tomorrow with you. So this is how it works. Very simple. Sami's number one idea every morning. And the focus is on stocks making major transitions. There's crystal clear entries and exits, absolutely zero guessing. So you can go to work in minutes, if not seconds. Also, live portfolio updates with Sami, first and third Monday of each month. So you get updates on all the ideas, see what's on Sami's radar. You could be like me and annoy Sami with all the questions you want to ask. Sami actually can't stand me because I ask him too many questions. I'm kidding. But you can ask Sami literally anything you want about the market, about trading, about psychology, risk management, et cetera, et cetera. Sami is an open book. Also, you get Sami's earnings plays. Nothing changes here. So you get Sami's buy-sell list for stocks reporting earnings. At least I'm being conservative when I say 150 plus new ideas every earnings season, but it's like a bonus subscription for free. It's probably more like 300. Okay, so we're going to throw in some bonuses because why not? Let's make things fun. You guys are staying here after work. It's getting late. So if you join now, you get Sami's Strategic Swing Trader course, which is full video training in his swing method. It's a $295 value bonus, and it's included with a $199 purchase today. Also, you get a $250 credit towards Sami's Pristine Mentorship Program. So if you want to join the mentorship program in the future, you can apply this $250 credit towards that. And yes, it's included with your $199 purchase. So let's add it up. So it's $399 value for your first quarter of number ones, $295 value for the SST course, $694 total value. And it's just $199 for you if you go to t3live.com/Q. t3live.com/Q. And the reason it's the letter Q, because Q is the greatest letter in the alphabet. That's why. t3live.com/Q. And don't forget, you also get a $250 credit towards the Pristine Mentorship if you want to take it in the future. Again, included with your $199 purchase. Again, you're saving $495 if you go to t3live.com/Q. So after 3 months, you get billed at $399. If you stay on, you can cancel at any time with a phone call or email. Sorry. Yeah. Hold on. I made a stupid. Everybody forgive me. Everybody still with me? I can't believe I did that. I apologize. You could just email us. You don't need to call us. You know, like those annoying companies like your gym where you have to call or come in person to cancel? No, you can just email us. So set a goal. How much money do you want to make? 1,000 or 10,000 or 50,000 or 50 million, whatever. If you don't hit it, just cancel. Again, no annoying phone call required, which I think might be the new T3 Live motto for our customer service. No annoying phone call required. So this is what people are saying. Amy from North Carolina said Sammy's a true market professional and an excellent instructor. Steve from New York, he's knowledgeable, thorough, and honest, a 10 out of 10. Alberto said that the short and long trades that Sammy's provided were right on target to make money. David from California said, made me more confident bringing trade ideas to me daily. That saves me time from researching every night. Josh from New Jersey said, I've only been a member for 1 month. I've already recouped the annual cost of membership. Sammy's earning plays make me money. I do not need any other trades during earning season. Randall from Pennsylvania said, I subscribed for a year. I paid for my subscription on the first day with the earnings plays overnight. Tom from Calgary, again, we read this one before. Sammy is simply the best trader I've met. Plus, he can teach, which again is rare. So if you want to lock in this deal, t3live.com/Q, t3live.com/Q, and you can save $495. John in the chat is saying Sammy's pristine class is awesome. I agree. Everything Sammy does is awesome.
I'll make sure to tell my girlfriend that.
She doesn't know that?
Please.
We're going to call her. What's her phone number? I'm going to call her live right now.
Let me give you guys, everybody. Let me give you her phone number.
Yeah, we need to. That's terrible. Okay, so Sammy, somebody asked before about weekly charts. Do you use weekly charts at all in your swing trading?
Yes, I do. I basically like to look at 4 different time frames: the hourly, the daily, the weekly, and the monthly. For swing trades that I'm thinking, they're going to last for a few days, I'm primarily on the daily time frame. I look at the hourly chart just for an entry and to give me the timing. If the hourly is setting up and is looking good and is in sync, in alignment with the daily chart, then I know the stock is about to go. If I'm looking at the larger time, at a longer term play, then I'm primarily going to be looking at the weekly and the monthly, and I use the daily as my timing, so to speak. So I definitely look at the weekly for sure.
Okay. And just so we're clear on how you handle your ideas, you always have an exact stop, correct, when you enter a trade?
I have an exact entry, exact stop, and an exact target. And not always an exact target, because sometimes the stock is at all-time high. I don't know what the target is going to be. So I'm going to just manage it and trail it for my account and for subscribers. But I always publish the entry and the stop prior to taking the play.
Mm-hmm. Okay, and just so everybody knows, like whenever we need an update on stops or targets, that is in the newsletter. So this way, you are always updated. Now, I think, Sammy, it would help if you talk a little bit about your overall like philosophy in risk taking and risk management.
Yeah, so I've people ask me if I enjoy if I enjoy gambling, or I've never gambled in my life. Probably I don't enjoy it. But I like to take risk, calculated risk. If I know what I'm risking ahead of time, if I know that over a series of trades, the edge, or I have an edge, the odds are in my favor, then I will take risk. But I'm not a risky kind of guy. I play it safe or conservative, so to speak. But I know when to push it and when to lay low. I remember during the pandemic, to tell you the truth, the portfolio of plays that we had that I was tracking on a nightly basis, was over 75 items. Like, who carries 75 items? Well, I do, because during the pandemic, it was just amazing. So I do take, I am, I like to take risk, but only when I feel the environment is right and things are going in my way. If things are not going my way, then I just lay low. I can't help it but lay low, because things are not working out. So I'm not finding a lot of good setups. So with risk, I have this, I think as a trader, as traders, we all have to have this paradoxical relationship to risk and taking risk. Sometimes you have to love it, and sometimes you have to hate it. You love it when it cooperate, when the environment calls for you to love it, and you hate it and shy away from taking risk when there's not much going on, or when things are not working out. So did I answer your question, Mike?
Yeah. Okay. So are you ever, is there like a minimum return you're ever looking for when you enter a swing trade?
So I'm looking for about, normally minimum of 2-to-1 reward to risk. 2-to-1 meaning twice what I'm risking. So if my stop is $1, then I'm looking for at least $2 in gain, at least. This way, I don't really have to be right all the time, and I can still make a lot of money, because my reward is a lot larger than my risk. So I don't look at it in terms of percentage, but I look at it in terms of what am I risking? Is it $1? Is it 50 cents? Is it $5? And I want at least 2 to 3 times that when I make money on the play.
Okay. So you don't think in terms of, I want to make 20% or 30%, it's always relative to the risk?
Right. I never really know how much I made on a play in terms of percentage. Like the VNet, I never would have known it was up 163% if you hadn't mentioned it. I always think about it in terms of risk. And I know that the VNet reward to risk was 13-to-1. So 13 times my risk, which means I can lose on 13 plays in a row and still be breaking even after the VNet trade. So that's how I think of it in terms of reward to risk. And actually, the person that taught me this is Van Tharp. He talked about it in his book, How to Trade Your Way. Trade Your Way to Financial Freedom was the name of the book. I think it was 450 pages long, and I read it twice. It's awful, but it's like medicine. It's awful, but you need it. And so he talked about how, he called it the R unit, I think, basically the risk unit. How much are you risking per trade? Is it $100, $500, $1,000? And how much are you looking to make when the trade goes your way? So that's how I look at it, not percent, not in percent or points, or however way other people look at it.
Okay. And guys, again, we just want to go over this to make sure you understand. So it's just $199 to start. You get a quarter of the #1 subscription. You get the SST course. It's a $694 total value. It's just $199 for you to start. Go to t3live.com/Q, t3live.com/Q. And again, if you want these big picture ideas, these ones that can play out and generate big returns, this is a great way to get started with Sami. Now, Sami, it's interesting that like you kept going back to these China plays over and over again. Now
we just played one yesterday. I called it as an earnings play, and I kept it over, and I added to the position YMM, and we have also the BZ, and we have a couple more. But basically, I also called the JD tonight. So yeah, I keep going back if they still look good. Why not? While they're still transitioning.
Okay, yeah, I think it's interesting because again, like everybody's talking about China now, but the charts predicted this for a year now. And Sami was in there early the whole way. Like if you've been watching our videos where I don't know how many times he gave me Alibaba in like the 80s or the 70s even. And again, guys, go to t3live.com/Q, t3live.com/Q. You can save $495. Sami, it looks like that is going to close us out. This might be our fastest webinar in history, which is a
My
miracle.
girlfriend approved.
Yeah, we want you. Are you going out to dinner?
That's what I'm saying. Is where I'm in the living room. She's approving,
She
nodding her head.
Okay. Tell her I did this for you guys. I did this for love. Because all right, everybody, we're gonna wrap up. Everybody wish Sami a happy birthday. I'm ordering everybody to wish Sami a happy birthday.
They already did, Mike.
They got to do it again. Say happy birthday
No.
to Sami one more time, everybody. These are the rules. You have to say happy birthday to Sami one more time. Okay. And again, guys, go to t3live.com/Q.
Thank you.
We're
Thank
getting
you,
tons
everybody.
of happy birthdays in the chat. Thank you guys for joining us. Have a wonderful day. We hope you see you in the service tomorrow morning, t3live.com/Q. Everybody have a wonderful evening, especially you, Sami. Happy birthday.
Thank you. Thank you, Mike. Take care, everybody.